Welcome back. Markets are lower this morning. Take a look at futures indicating a decline at the start of trading. The Dow Industrial is down 109 points. The Nasdaq is down 188 right now. Yesterday, the Dow was higher, but the other averages were lower. The S&P and the Nasdaq slipping for a second straight day as semiconductor stocks led a pullback. The Dow was up 159, but Nasdaq was down 134, and the S&P down 5 points at 4 o'clock on Wall Street. ProCap Financial's chairman and CEO Anthony Pompliano is with me right now. $40 billion in assets under management. What do you think about these markets, Anthony?
Well, I think that the market is showing us that the AI trade is real. People are very excited about the foundation that's being laid. You know, one of the things is that the United States of America is laying the groundwork for the next century. We used to be an analog industry. Now we are going into this digital world. And so artificial intelligence needs a lot of energy. It needs a lot of data centers. It needs a lot of compute. And we're building that out. The rest of the economy is trying to figure out, is this stuff going to be good or bad? Is it going to be a threat or is it going to help me? And I think that that's really what investors are trying to navigate here is we know the AI trade is real. We know that there's going to be things that are scarce, and so people want to allocate there. But what about the rest of the world? And that's what everyone's trying to figure out with their capital.
And I mean, the amount of money moving into AI and these data centers is just extraordinary. And I spoke with the team over at NVIDIA the other day, and they were telling me about this incredible demand that is just not stopping. Anthony, you recently launched your own AI model called CFO Silvia, and you said that the model helped boost investors' net worth between 16 and 42% within 6 months of using the platform. If that's true, I want in. Tell us how this works.
Well, one of the things you got to remember is that artificial intelligence is very good at going through complex sets of information. And so one of the problems with the general purpose models like a ChatGPT or a Claude is that it doesn't have the context of your personal financial information. So what we built is Sylvia, which you can come in and you connect your portfolio, your bank account, your brokerage account, your crypto account, your credit cards, your private investments. And then you begin talking to Sylvia about what your goals are or to identify risk or try to evaluate various investment opportunities for your portfolio. And because not only does she have superhuman intelligence from the AI models, she also has the context of your portfolio. So if you go and you ask, for example, how do I get my tax rate down to ChatGPT, it will give you very generic advice. If you go and you ask Sylvia that, she will go asset by asset in your portfolio and tell you specifically for you, what should you do? And so we have seen thousands of multimillionaires go and sign up for this product, and they are asking on average 15 questions per week. And so as we see more and more people use the product, we can track the net worth growth. And what we see is across all income levels and across all net worth, the more they use the product, the wealthier that they become.
Wow, that's incredible. But I mean, Anthony, is there a downside risk to having the machine know that much information about me?
Well, if you think about it, actually, I think a lot of people trust the AI more than they trust humans. You know, we hear people tell us that I'd rather ask the AI the question because the human's not going to judge me. They'd rather tell the AI something because they feel like the human may actually make a mistake or can't do it as quickly.
Yeah.
You know, one of the things I always tell people is go ask your financial advisor, your accountant, somebody, run a Monte Carlo simulation for me, and then ask Sylvia to do it. Sylvia will do it in seconds. You may not get an answer back from the human.
That's true. But what about agentic AI and the concerns around it? I mean, that, you know, you give these machines so much information about you, they could actually develop their own personality and perhaps at one point do things that you're not expecting, unpredictable behavior.
Yeah, I think that one of the important parts about Sylvia in particular is we don't touch your money, so we can't move your money, we can't make a trade for you, et cetera. So it's information, which I think gives people a lot of confidence. But the other piece of it that I think is really important is that as agentic AI becomes better, what you're going to find is that people are going to actually have the button as to, do I want to authorize this or not?
Right.
You know, I've hooked up AI systems to my email or to Slack, et cetera, and you can actually tell it, hey, I don't want you to be able to send emails.
Right.
You know, I don't want you to be able to actually message. I want you just to read and then give me information back. And I think that that's really maybe where a lot of people are comfortable. Is I want the intelligence, but I don't want you acting on my behalf.
It's very important. Well, we had Betsy Atkins here in your seat when we did our week on AI just a couple of weeks ago, and we really did a deep dive. And she told us about 16 different agents in an Anthropic study that all went rogue. You weren't supposed to. They had rules that you don't go into my personal information here, don't go into government files here, and every one of them went rogue and went into when they said, oh, you know, we know we're not supposed to go into personal files, but we needed this information. We know we weren't supposed to go into government files, and we needed that information. So that's why I'm asking you.
Well, if you think about at companies, you know, sometimes humans do the same thing. And so it becomes this kind of weird thing. You know, one of the best ways to get someone to do something is tell them not to do it.
Yeah,
and I think that maybe the agents and the humans are really just mirroring each other.
Well, you're right. Meanwhile, the crypto market has been pulling back again. We're what, on Bitcoin or below 77,000. What's your take on this market? And in terms of use cases for crypto over the long term, how do things change?
Yeah, I went to CFO today and I asked about the crypto market knowing I was coming out here. And two of the things that really came up is the compound annual growth rate of Bitcoin over the last decade is 70%. It has destroyed every asset.
Now that's
70%
great. You're an
crazy,
investor in Bitcoin.
right?
Now, you made money on it.
Now, the second thing is over the last 90 days, Bitcoin is up about 14% or so. So it's very volatile, which I think people, if you don't pay attention on a day-to-day basis, you kind of look and you're always surprised at where it is because it moves around a lot. But still up 15% or so in the last 90 days. Now, the reason why I think that's happening is we have a world of uncertainty right now. What's going to happen to interest rates? What's going to happen in Iran? What's going to happen on a geopolitical stage, et cetera? And so from that, I think people want certainty. And so they look to assets like Bitcoin, which are non-sovereign or finite, and also can be audited by anyone in the world. And so I think that as Bitcoin continues to increase in adoption, where the adoption is coming from is very fascinating. There's lots, millions, tens of millions of people who own it. But now Wall Street's getting in the game. And you're starting to see these really big firms that are very smart, who are looking for risk-adjusted returns, who have a fiduciary duty to their clients.
Yeah.
And they're starting to say, you know what, Bitcoin is good enough for me. I think I'm going to go and put it in my client's portfolio, and I think that's a huge step for Bitcoin.
Well, I know that you're an investor in Bitcoin, but you also have said that the industry is dying.
Well, I think that the 4 areas of crypto that are going to end up surviving are Bitcoin, stable coins, equity infrastructure, and tokenization. But most of the rest of the industry is just kind of becoming a ridiculous clown show, right? They are basically running around and they're trying to be mercenaries. Everyone is trying to figure out how do I, create some coin and hope it goes up in value. But ultimately, I think that sophisticated investors are trying to figure out where can I put my capital and have it resiliently hold value or increase in value. I think those 4 areas is where that's going to happen.
You are a straight shooter, Anthony. Great to have you this morning. Thank you.
Yeah, thanks for having me.
All right, Anthony Pompliano joining us. Stay with us. We'll be right back.